welcome back. You're watching the opening trade. Now it's time to put the focus on Karnataka Bank again, with the results were showing almost 6% growth in net interest income. Net profit was up almost 8%. NIMs again showed a mild dip again on a YOY basis, 2.8% where the NIMs came. Provisions almost stable, asset quality almost stable again in the context of deposit growth, 9% up, advances 11% up. The question now for the investors is, how's the trajectory growth outlook looking for the remaining part of FY20? And for that, now let me welcome Mahabaleshwara MS, MD and CEO of Karnataka Bank. Sir, good morning and welcome to the show. First question to you regarding this quarter earnings, the June quarter earnings, looks like a single digit growth. What were the moving parts for you?
Yeah, even though for the banks, the first quarter is generally perceived as a little bit tough quarter, we have had a very smooth side, in the sense there has been around 10% plus advances growth. As a result, the net profit what we have declared for the current quarter is all-time high quarterly net profit for Karnataka Bank, that was at around 7.46%. And I'm very happy that this particular growth has come from the core banking business. That means our interest income has gone up by 12.56%, and also the other income also went up by 17.24%. And there was less provisioning pressure also during the current quarter, as the asset quality has slightly improved. That was the significant thing. And going forward, I am confident that the asset quality we would be able to maintain, because during this quarter also, but for one big account, that is from the Reliance ADAG group, wherein I had an exposure of around 138 crores. But for that, there was no major slippage. And we are confident that this performance and trend would be continued for the current financial year as well. And I am optimistic that by March 2020, we should be able to have a GNPA of less than 4%, and with an asset, that means advances growth of around 17%, what we had projected at the beginning of the year.
Okay, 17% growth in advances by March 2020. That implies you're expecting acceleration through the year. Before I ask your vertical commentary, let me ask you first here, what were the fresh slippages, sir?
Yeah. See, our gross slippage during this particular quarter was in the range of 526 crores. As I said, if you exclude around 138 crores of NBFC exposure, the slippage is around 389 crores. Even though slippage ratio is 0.99% for the current year, excluding that NBFC exposure, it would be around 0.73. I am optimistic that we would be able to contain the slippage to less than 3% to this particular financial year as well.
Okay, and a follow-up on the asset quality, a mild uptick in asset sort of GNPA and NPA perhaps is not a main concern, but provisions are lower. So how much satisfied you are with the provision coverage ratio? Any sort of what's the trend looking like for the provisioning over the next 2-3 quarters?
Yeah. See, asset this GNPA also, percentage-wise, even though it is at 4.55%, amount-wise it has come down. So we had 2,456.38 crores of GNPA. Now it is at 2,437.53 crores. Out of this 2,437.53 crores, we have about 57% under the substandard category. As a result, provision requirement itself was less. Nevertheless, we have been able to maintain the PCR at around 58%. Going forward, I am optimistic of having a PCR of around 60%. The reason is even though majority of our advances are well secured, so as I said, around 57% of our GNPA is already under the substandard category. So as per the IRAC norms, the provision would continue to be maintained, and as and when there is requirement of some accelerated provision, we will also resort for that. So as a result, nevertheless, during the current year, as there was, as I said, less pressure for the provision related things, the overall provision, which was at 216 crores, so this has come down. during the current year as well.
Okay, sir. We asked enough about the book quality here. Now let's talk about the growth. Since again you were indicating perhaps 15 to 70% advances growth we could be reaching towards the March quarter. Now when I look at the NIM, almost 5 to 6% growth in this quarter. When I look at the NIMs, roughly 2.8% NIMs. Now I want to combine my 2-3 questions into this one question, sir. One is, which verticals you think could be powering your advances growth to double digit, strong double digit, 15 to 17%, where you are seeing positivity? And number two, NIMs, can those expand with this growth? Can they cross 3% as we move towards the March quarter?
Yeah, the growth areas are housing. We have been showing a growth annual growth rate of around 23.61%. And the second growth area is MSME for us. And also there is good demand for the equipment loans to contractors as well as agricultural ancillary activities. And there is some uptick in case of personal loans, which has shown a 26.50% growth, as well as auto loans at 8.80%. So these are all the growth areas. In essence, we will be focusing more on the retail as well as the MSME advances. And this particular initiative has started about a year back and now paying rich dividend. In a sense, during the just concluded Q1 of FY20, we had exited about 2,500 crores of bulk advances, which was having a low contracted interest rate. And that we are now replenishing it with the retail and the MSME advances. With this, what happens is our growth in the net interest income, NII, would be robust. And that would also help us in having improved yield on advances. So as a result, I am optimistic that hereafter there would be a positive growth trend in the NIM. Most probably it may reach 3%.
Sure, sir. So it sounds good. One last question, sir, and that would be, since we're talking about NI, I just want to ask on the cost of funds, because if yields are going to look good, but if you are able to restructure your cost of funds, the NIMs could expand faster. So with respect to treasury yields, how much benefit is already completed in lowering cost of funds, and how much you can expect more?
There is no much contribution from the treasury during the current financial year. As I said, this time almost all my profit, everything has come from the core business side. In fact, from the treasury side, the trading profit this time was just 24.17 crores. So there may not be much fluctuation as far as the income stream is concerned. And we would be focusing, we would continue to focus more on the core banking business.
So thanks a lot for coming on the show and giving us all your insights into the results, and all the wishes for the remaining part of FY20, where you are ambitious about your growth trajectory. So we'll connect again over the next sort of development around the next results, and that's Karnataka Bank for you. Over the last almost 1 month, a bit of fall, but again, since the result time, again the stock has recovered, and at present almost 1% up here. Now from Karnataka Bank, let's put the focus on Jet Airways, which is now facing the insolvency